All right, man. So we're back again. Today is Sunday, 12th of October 2025. The time right now is 9:34. Just a couple of hours before the market opens, and I just wanted to share a few things. I just wanted to go over a few things. Give you guys a little bit of updates on a few things, especially what we talked about in the impromptu call from last week. You guys saw how, for the people who watched the video, anyways, you guys saw how almost everything that we talked about in that particular video played out to the T, right? So I just wanted to go over a few things. Now, I know in the video I just dropped, I talked about Euro USD. I did a whole breakdown on Euro USD. So in today's video, or in today's class rather, because it's going to be a video when you guys are watching it later. And again, if you're not watching these videos, I don't really know what to say to you, man. Like, this is one of the only ways I can really pass down my knowledge to you guys, so you can consume and repeat over and over again and get to understand, what's within my head when I'm analyzing these markets. So you have to watch these videos, all right? So I'm gonna go over GBP USD as I give you guys like a market breakdown, whatever updates on what's going on in the market. Now, this is all fresh. I've not really looked at the markets all weekend. This is all fresh. So you're gonna be getting like fresh set of eyes, on the market right now. So we're gonna jump in. Let's see what the market has in store for us. Um, First off, you can see here this is gold. I talked about gold last week. Definitely expecting a sell because we talked about a buying opportunity from down here. So we definitely expected the market to sell, but of course it didn't sell to, the expected point. You can see how the market just reversed back up upon hitting some type of demand level there on the 4 hour time frame. All right. Anyways, but this is gold. Probably come back to it later. This is gold. Um, Whoa, US 30 from last week, US 30. This was crazy, man, because I'm gonna break this down. US 30 was crazy. Okay. Remember, we were trying to buy US 30, and at some point, US 30 stopped creating those higher highs that we wanted to see. US 30 started creating, lower highs, lower lows on the 4 hour time frame. Of course, we all know the 4 hour time frame is a higher time frame, regardless of what type of trader you are. I believe we can all agree unanimously that the 4 hour time frame is a higher time frame. All right. So again, that's US 30 BTC in a very shocking turn of events. These were levels where I called on BTC a very long time ago. But even as the market was descending here, you can see how the market somehow failed to sweep all that liquidity before a run up. And all of a sudden, in just a couple of hours, the market was all the way down at 102K, straight into the demand level that was called earlier. And, we had that massive reaction off of that level, man. That was a very quick trade. Is definitely a trade that blindsided a lot of people. I think the only people that would have gotten in on this trade is guys who have, some type of access to some data tools, tools like the order flow tools and things of that nature, because you can really see, the footprints of buyers and sellers with tools like that. But that trade, that was a very fast trade. Not a lot of people would have gotten in on that trade, man. Trust me. Trust me. I'm not justifying the fact that I missed it, but like, come on, man. Look at this trade on the 1 hour time frame. Like, if you're expecting, there's a lot of demand levels, you could be expecting the market to interact with before the market comes all the way down here. This is a perfect example of a liquidation activity going on in the market. This is just one candle, guy. This is one candle. So within the hour, a lot of liquidity, right, was grabbed from the market. Now, this will give you guys a very good understanding of liquidity. When I preach liquidity, is more so from a different perspective a lot of the times when I talk about liquidity, because a lot of people have different concepts of liquidity that they apply in the market, but mine is kind of straightforward. anytime the market fails to mitigate a valid order block, liquidity is formed. All right. So we all know a bullish market, of course, always will keep on breaking structure to the upside, giving us higher lows that would in turn give us higher highs. Now, it is expected in a sort of balanced market, in a market whereby the flow between the flow of money between buyers and sellers are more so equal. We would expect the market to pull back a lot deeper, right? Preferably into the valid order block, right? Coming from the higher low that caused the break of structure and gave us a new higher high, right? We would expect the market to retrace deeper into this order block, react from this order block here before going ahead to give us a new high. All right. Now, in a case whereby that retracement is not deep enough, so we have this higher low that caused this break of structure and is responsible for this higher high. So therefore, we have an order block coming from this area here. All right. In a situation whereby the pullback is not sufficient enough or is not deep enough such that it gets to the order block, but then the market still creates a new high, of course, we have a new break of structure to the upside. Of course, we have a new higher low that has given us a new higher high, which is a structural fact. And of course, there's going to be a demand level here that a lot of people are going to be looking to enter the market from, with their stop losses just being below the demand level. Now, for the fact that they are risking their money at this level, okay, they are imputing a lot of liquidity into the market at this particular price point. Mind you, this level of demand or this order block is still very much valid. So if the market somehow decides that, you know what, I'm going to go to this order block instead before I create a new high, it means it's going to hit all of the stop losses underneath this level here, which ultimately means that it's going to grab all that liquidity. So is the market wrong for invalidating this? The answer is no. Okay, the market could have very, very much reacted off of this demand level because this is very much valid and giving us another new high, which will mean that this trade will be non-existent, right? It's possible that the market comes back later on, but this is very, very much valid. All right. But if the market decides for some reason to invalidate this, then taking liquidity off of that level is only a byproduct of the market mitigating this order block, which is valid. And that's the idea of liquidity. So again, coming back to, when I simplify what liquidity means is I said liquidity is formed when a valid order block fails to be mitigated. All right. So if the market attempts to mitigate the order block, fails, and then goes higher, of course, liquidity is formed underneath this. It's very much possible for the market to grab that liquidity before it pushes higher. Okay, and this is a perfect example here on BTC. We can see this on the 4-hour time frame. Okay, we can see this on the 4-hour time frame where we have this break of structure to the upside with this big push. Okay, now even from the daily time frame, let me do the breakdown from the daily time frame. All right, so even on the daily time frame, which is a higher time frame. Of course, we know top-down analysis, most of the times we start from the daily and or the 4-hour time frame. So starting from the daily time frame here, we can see that we've been in a massive uptrend on the daily time frame. We've seen the market push to the upside coming from this low, massive push to the upside giving us this high. We push down to this low and we have this push to the upside giving us this high. Of course, that's our break of structure right there, and this becomes our order block or our point of interest. All right, so on the daily time frame, I mark this level here as a point of interest on the daily time frame. And of course, just zooming into this level here and looking at the internal structure of the market now, because this low all the way to this high is definitely external structure on the daily time frame, and more internal structure will look like this: high, low, high. We have a low, successfully mitigating this order block here, based off of this internal breakout structure here. We have massive push to the upside, massive push to the downside, and then we have this high here. Okay, so that's internal structure on the daily time frame. It shows us that this order block here has not been mitigated. Now, this is what we call the extreme order block, or the origin of the breakout structure, basically. All right, so that level there is still very much valid. Now, notice how even before the market gets to that level, we have internal demand levels where the market previously reacted from. All right, so expecting the market to, at this point, expecting the market to come all the way down to this order block, the market failed to do that, right? The market pulled back into this level of internal demand and then did this. The market came back here and then ran up. This now created a break of structure to the upside, and of course everybody was looking to trade from this order block. Okay, forgetting that this order block here is still valid, right? The market just simply came down to this order block, reacted off of this order block, and then pushed to the upside. So that's the simple idea of liquidity. But anyways, I'm trying to break down this trade, where the trade came from, and exactly how you would have gotten a smaller entry. Because here on the daily time frame, if you're going to enter with the daily order block, this should be giving you probably like a 1:2 risk to reward trade right now. But of course, you can get a better entry, narrowing down the daily zone, all right, and getting a smaller area of risk to trade from. So this trade on the daily time frame right now is only but a 1:2 risk to reward trade. Let's see how you could have gotten a smaller area of risk and a higher risk to reward off of this trade idea, right? So I'm going to remove this. Internal structure on the daily time frame is still higher time frame market structure. I'm going to say this is external structure. All right. Again, you want to create templates for these things so you can work faster and more efficiently on TradingView. So now moving to the 4-hour time frame, I might need to go back and adjust some of these positions because it might tend to shift when I jump from time frame to time frame. Okay. So exactly what I was talking about. So I might need to go back and adjust some of these. That's the same level on the 4-hour time frame, showing you how, this is multi-time frame analysis, right? So the daily time frame and the 4-hour time frame, they're basically sharing the same structure points. The reason why I'm putting all of this on the chart is for me to know where I am on the chart. I'm trying to track exactly where I am. What structure am I following? Am I following the daily structure? Am I following the 4-hour structure? What exactly am I doing in the market? All right. So the black line here is coming from the daily time frame. But of course, we are not on the daily time frame anymore. We are now on the 4-hour time frame. Now, on the 4-hour time frame, if we examine this first leg of impulse on the daily time frame, we can see that we have internal structure on this very first leg, right? And of course, we know the daily order block is coming from this area here. This is the daily order block. Now, within the daily order block, we can see 4-hour internal market structure, all right? We can see a reversal from downtrend to uptrend. So coming from here, we have high, we have low, we have high, we have break of structure to the downside, okay, of this low, we have low, we have this high, and this high creates a low, okay? Now, we have the markets attempting to go back, failing, low, then we have a break of structure to the upside here, we have a pullback, we have a high, we have a low, then we have a high. Now, this is internal structure on the 4-hour time frame. What we are trying to do is we are trying to narrow down the daily order block to a 4-hour order block, but we need that 4-hour order block to be within the level of the daily order block just to see that alignment. Okay, a lot of you guys might not understand what I'm doing here, but if you've been a student of mine for a very long time, then of course you know exactly what I'm doing. And if you're not a student of mine, then you probably need to buy the course. Okay, buy the GPS forex trading blueprints. I develop all of this from scratch. This is all logic and market structure. All right. So on the 4-hour time frame, I'm going to change the color of this to red, just so we can differentiate the time frame that this is coming from. We want the opacity to be a little bit higher so we know exactly what we're doing. All right, looking at this on the 4-hour time frame, there was a reversal here. And looking at the structure on the 4-hour time frame, we had a break of structure, right? So I'm going to take my time to do this. I'm going to take my time to do this because I want this to slap, all right? We've been having consecutive breaks of structure to the downside here on the 4-hour time frame. Now, all of a sudden, we started having, now this will be our area of change of character. This is the last high that created the last low. The market attempted to go higher, failed. This should have given us a lower low, okay? This area here should have given us a lower low if the downtrend was going to be in continuation. But at the end of the day, that ended up failing. There was a break of structure here, okay? And this gave us a higher high, making this a change of character. So this is CHO. CH, that's a change of character. Okay, so the market reversed from that. Now, mind you, when the market started reversing, this was the first low, high, low, and then we had a break of structure to the upside. You can see how the market never came back to mitigate this. Now, the area of the change of character there, this first candle there, of course, we know is going to be our breaker level structurally. So breaker level is aligned with internal demand level that caused a change of character. I know that's a lot of information to process if you're new to trading smart money concept and things of that nature. But again, for the people who have been following me for a while, you know exactly what I'm talking about here. This is a detailed breakdown. Okay, we're not joking around here. All right. So we're basically getting this level. Now, the way I mark this order block is I took the whole selling intention as the order block. Typically, you want to mark your order block from the last bearish candle, which is this candle here. Maybe the, open of this candle, right? But the way I trade is I use the candlestick to read intention of the market. Now, for the fact that this wick is very long to the upside here, it is telling me that basically buyers tried to push the market up, and the selling intention that created the order block basically came from this very high here all the way down before the buyers push the market all the way up. All right, again, a lot of you guys may not understand that. I don't really have the time to explain all of that in this video here, but that's how I decided that this area was going to be the area of my order block rather than this area here, okay, or this area here. So keep that in mind. All right, keep that in mind. So on the 4-hour time frame now, we see that the 4-hour order block is definitely in alignment with the daily order block. Okay, that's basically what we want to see. We want to refine the daily order block to the 4-hour time frame, then refine the 4-hour order block down to maybe the 2-hour or the 1-hour time frame. Now, let's go back again to the daily order block. Let's compare what the entry would be on the daily and what the entry would be on the 4-hour, and let's see what the risk to reward is going to be like as of right now. Okay, so on the daily time frame, this is the high of the zone. Daily time frame, let's put our stop loss somewhere around there. Okay, currently we're going to be having roughly about a 1:2 1:2.2 risk to reward trade using the daily zone, right? Now, upon refinement to the 4-hour time frame, okay, we're going to move the entry a little bit downward to the, just at the top of the 4-hour zone. Then take the stop loss just below the 4-hour zone. Current market right now, we can see how the risk to reward already has doubled. It's now looking like a 1:3.9 risk to reward trade just based off of the fact that we are able to refine the daily zone to the 4-hour time frame. All right, now I'm going to do the exact same thing once more, refining down to the 2-hour time frame. And again, it's all in the structure, guys. It's all in the structure. You need to go back to that particular area on that particular time frame and check the market structure. All right, check the market structure. So already we can see this is the daily structure. This is the 4-hour structure. So you can see how we are basically reducing the area of risk using market structure. Now here, the 2-hour and the 4-hour are sharing the same structure points. Okay, meaning that the size of the 2-hour order block we can see here is almost as the same as the size of the 4-hour order block. That's why you can see the 2-hour order block here is overlapping entirely. Okay, it's overlapping entirely the 4-hour order block. Okay, the people who wouldn't consider the week as part of their order block, so those people will probably draw their order blocks like this. And if you're one of those people, let's see what this trade currently will be giving you upon refinements to the 2-hour time frame. Now, typically, I wouldn't draw my order block like that, but I can guarantee you there are people who will draw their order block like that. So, based off of that, let's see what type of risk to reward those guys will be floating in right now. All right, so reducing the stop loss once again, we can see how the stop loss reduced from the daily to the 4-hour, now to the 2-hour time frame. And this isn't even upon confirmation. Okay, we can go lower and look for confirmation and get even more risk to reward out of this trade. So upon refinement to the 2-hour time frame, guys, you can see how this is running at a 1:8 risk to reward trade as of right now. And this is why you need to understand multi-time frame analysis. You need to understand liquidity, and you need to understand the fact that the market is always following the higher time frame narrative. That means that the market will always come to mitigate higher time frame order blocks, right? It might take some time, but trust me, if the market is not mitigating higher time frame order blocks, then it's definitely creating some form of liquidity. Now, does the market always come back for that liquidity? Not all the time, all right? Or sometimes maybe not immediately, okay? Because this market created a bunch of liquidity before it came back all the way to this level here. We can see how the market created liquidity here. There was liquidity created here. And that was the liquidity that was sufficient for this move right here. As soon as the market swept that liquidity into this demand, we can see how the market reacted off of the demand. That would have given amazing trade here. But keep in mind that this was also creating liquidity for this. And we can see how the market came all the way back for that liquidity. I mean, does the market come back for liquidity all the time? I really don't know what liquidity the market is going to sweep. That's why I said for the people who have some data tools, okay, people who can see the weight of the buyers and sellers when the market gets to some type of demand, they're going to know that, okay, based on the sizes of the orders that are coming in, with the tools that we're using to see those back-end information, then maybe there's going to be a reaction from here. All right, but ordinarily, when you're a trader who's relying only on price action, you truly don't know what liquidity the market is going to take. So you treat each and every higher time frame demand level as though there could be a reaction from those zones. All right, and again, as day traders, the market can react from a higher time frame zone, just like it did here. The market can react from this zone, right? As a day trader on the 15-minute time frame, 30 minutes time frame, 1 hour time frame, you've already gotten your day trade 1:3, 1:4, 1:5 on this push, and you're out of the market before all of this reversal comes back to take you out. All right. So this is on the daily time frame. This took a number of days before it got to the top here. Just looking at the number of candles there, this took a number of days, almost 2 weeks, if I'm not mistaken. Of course, as a day trader, you've eaten a lot from this leg. I don't see how this market coming back should be coming back to close your trades at break even stop losses. Okay. So yeah, that's like a breakdown of what happened there on BTC. From a market structure perspective, from a liquidity perspective as well. As of right now, the market is definitely within a range. This is the high of the range. This is the low of the range. I really don't know if this is going to go up, give us a new high. Although looking at BTC from a higher time frame perspective, from this angle, we are looking very, very much bullish. Okay, so you might want to go into lower time frame to see if we're having bullish confirmation, if we see the market creating new highs. Looking at the market here on the 4-hour time frame, we have this long sweep to the downside. The market pushes back up, comes back down, does something like this, there is some type of internal liquidity being swept from here. Okay, there's some type of internal liquidity being swept from there, and of course there's internal break of structure which might make this level here an order block and probably make this high a breaker level. Okay, now jumping to the 2 hour time frame, so I'm going to call this maybe like a higher time frame breaker. So going to the 2 hour time frame, we can see the structure a little bit clearer on the 2 hour time frame. Okay, we can see now 2 hour time frame is developing some type of market structure. Now, mind you, if we're going to be looking for sell from the higher time frame, this is why I said the higher time frame narrative is always what's supposed to take more importance or more priority, right? If we're going to be selling this from the higher time frame, we should be looking at an order block. This is the closest order block I can see on the daily time frame. So it's possible to expect the market to come to this order block for it to sell off. Okay, that's one possibility. That's a daily supply level. Okay, now coming to the 4 hour time frame, let's refine that level. On the 4 hour time frame, we can see where's the last break of structure. This level here is going to be a breaker level on the 4 hour time frame. Now, because it's breaking to the downside, I want to move the text to the bottom to signify that that's a downward breaker. And an order block on the 4 hour, this will be the 4 hour order block aligned with the daily order block on the 4 hour time frame. So that will be a 4 hour supply level. We can see how the daily and the 4 hours align there. Again, I'm just using individual structure on the 4 hours to get my 4 hour order block. So in case you don't know what I'm looking at, this is exactly what I see. The market was bullish. We had high. Another thing is you can see the consistency of my strategy, right? The same thing I did for, the other trade I broke down on BTC is the same thing I'm doing here. We can see how there was reversal here. This was change of character. Now this is a low. We have high. We have low. We can see consistent break of structure to the downside. So the trend has definitely changed. High, then the market sells off, right? So this is a breaker level and this is an order block. Of course, the market has not come back to mitigate this order block. We have a fair value gap here. Okay, so there's a lot that's going on here, but basically I'm just trying to give reasons why I mark this as a daily order block, and this is now a 4 hour order block aligned with the daily order block. So all of this is to say that we can expect the market to get to this level. So us looking for a buy is not like we're mistaken. All right. The bullish narrative will always play into the bearish narrative, and the bearish narrative will always play into the bullish narrative. That is to say, if the market is going to sell, the market has to buy for it to sell. If the market is going to buy, the market has to sell for it to buy. Okay. Now, to put this in proper context for you to see visually here, what I'm trying to say is that if this sell is going to materialize at the end of the day, then the market must somehow find its way up before it's going to sell. Okay, so based off of that, us looking for a buy off of this 2 hour internal trend, is not a bad idea. Okay, it's not a bad idea, right? So basically, this is a low, this is a high, this is a low. We have had a break of structure to the upside. Now, I know this is like no man's land. There's not a lot of information we can, play off of here. We just rely on the structure we are seeing immediately, like the immediate structure and how it plays into the higher time frame, picture. Okay, that's what we're relying on right now. There's not a lot of information we can play with. So let's go lower to the 1 hour time frame. Let's see if things will start to take shape on the 1 hour time frame. Let's see if we can see clearer the structure on the 1 hour time frame. I'm going to remove this just because that breaker level is not accurate. So this was from the 4 hour time frame. On the 1 hour time frame, is looking like we already mitigated this internal breaker. This breaker here has not been mitigated. Okay, this breaker level here has not been mitigated. So that's like a more accurate breaker level. Again, templates are very important. That's a lower time frame breaker. I can guarantee you it's not going to show up on the higher time frame, right? So on the 1 hour, this right here is an order block on the 1 hour. That could be the entry, or you could wait for confirmation on the 1 hour time frame. Or we can see that there's a breaker level there. There's some weak activity going on there, right? That could be the body of another candle on a lower time frame. So I'm going to go to the 15-minute time frame. Boom. Okay, so we can now see there is a body of another candle, and this one already mitigated the breaker, and it has sufficient liquidity. Okay, it has sufficient liquidity that the market can target. Remember, I said I don't know which liquidity the market is going to grab. All right, there's liquidity that makes this area here valuable. So it's very, very much possible that we can have the buy from that level right there. The market might not come all the way back to give us a deeper retracement into this level here. We can already see successful mitigations of almost all of the demand levels here. We have demand levels here, looks to be successfully mitigated. Demand level here looks to be successfully mitigated. This is the last level of demand that caused a break of structure to the upside. The market failed to come back to mitigate. This one over here caused the break of structure to the upside. You can see how the market never came back to mitigate. Now, the only reason why we're going to be looking at this order block as a potential level of entry is because the order block, the structure was broken from here, made this level here a breaker level. We can see that the market already retested the breaker, closing the gap there before continuing to the upside. And of course, it has created liquidity and gone higher. So we can have something like this and continuation to the upside, because we already have a mitigation of the breaker level. But if the market is going to come below the breaker level, then of course it's going to come here and maybe give us this, or the market could go all the way there. Now, when you know the levels you want to trade from, this is where risk management now comes into the picture. All right, you now need to calculate your lot size, your correct lot sizes using your lot size calculator. Decide whatever percentage you want to risk in your account, calculate your lot size, and place your trade. Okay, risk management is definitely key. All right, so that's gonna be BTC. If I'm just gonna give like a trade off of what I see in the market right now, coming on the 15-minute time frame, anyways, I can now start to see some internal levels of supply. Okay, that now suggests that the market might not want to go all the way into the daily supply. Okay, I can now start to see some internal levels of supply. Look at this level here that's aligned with the breaker. We notice how there's an internal level of supply on the 15-minute time frame, just using the 15-minute market structure. We have multiple levels of supply. All of this could be instrumental because the market can react from any one of these supply and just continue its decline. Okay, continuous decline. Remember, this area here is the area where we had that fair value gap. So for fair value gap traders on the 1 hour time frame, right, the market might be reacting from a fair value gap on the 1 hour time frame, but you can see clearly how the market could also be reacting simultaneously, right, from a 15-minute order block. Okay, so being on one time frame doesn't mean something is not happening on another time frame, right? If you're on the 1 hour time frame, you can see a fair value gap. But if you're on the 15 minutes time frame, of course, when you zoom into the market like this, you can see there's definitely a candle there. And again, reading into the candlestick. Okay, this is what I did earlier. Reading into the candlestick, I can derive an order block because this is clearly showing me market intention that had the market going rally, what drop base drop. So this is what I see structurally. I can take this low to this high as buying intention, and this can be a point of interest. Okay, if there's any candle there, I can just mark that candle, and whatever candle is there, regardless of it being a bullish or a bearish candle, that can be my order block because I'm picking the intention rather than a particular candle. Again, it comes with experience anyways, but that's just how I do it. Now, looking at this, we can see this is a bullish candle that's up move. All of this is a bearish candle that's down move. This is another bullish candle that's up move, bearish candle that's that move. We can see how the market never came back up to mitigate that. You can see the market just continued to decline. So that's the reason why I marked there as an order block. All right, on the 15-minute time frame. Again, that area there is, what would call middle of nowhere on the 1 hour time frame, just so you can see. Nothing is there on the 1 hour time frame. Okay, nothing is there on the 1 hour time frame. Even here, that we had an order block, a clear order block on the 15 minutes time frame. Nothing showing up here on the 1 hour time frame. So again, this is what we call multi-time frame analysis. You want to check to see on different time frames whether we have something there. Again, it shows up here. Nothing is going on here on the 1 hour time frame, but of course on the 15-minute time frame we had a bearish candle that meant that we had an order block from that area there. So this is multi-time frame analysis at its finest. All right. Again, so that's BTC. I can guarantee you that the market is going to react from one of these levels. Trust me. Okay. But of course, we can expect it to maybe buy up into those levels there or get to these levels and continue its decline. Whatever is going to happen in the market is going to happen in the market. All right. So that's BTC. Let's go back daily time frame. So on the daily, what are we most likely expecting? We could expect that the market on the daily gets all the way up here, or maybe fills in some of this imbalance at least, or it could push all the way to the upside. So if it's going to push all the way to the upside, those buy levels that we marked out, it could react off of one of them and give us those buys. And if it's going to sell, it can go up to those levels that we have now marked on the 4 hour time frame, 1 hour time frame, 2 hour time frame. It can get up to one of these levels and sell. All right. So what we're doing is we're spotting all of the possibilities, okay, and we're waiting for some certain type of confirmation, okay, for us to now execute the trades, basically. All right. So that's BTC. This is Euro USD. Very interesting price action here on Euro USD. Again, the time right now is 10:11. This is pre-market open analysis. Just looking at Euro USD here. Wow, Euro USD price action has been beautiful. Of course, the market has grabbed some liquidity. Again, the idea of liquidity is coming out here in Euro USD. The market has grabbed some liquidity, but again, I think we can follow the downtrend on Euro USD. I don't know how you guys are seeing this right now. This is Euro USD on the daily time frame. This is Euro USD on the daily time frame. Let's go back out a little bit more. This is what we're seeing on the daily time frame. All right. So it's kind of tricky here because the market has come to some levels of demand. Okay. And the market is in a selling profile at the same time. Okay, so just following recent price action, of course, we can all see that all of these legs are bullish. This whole leg, the market has been bullish for a very long time, right? So if we're going to follow the bullish narrative, okay, zooming into most recent price action, I want to imagine that you guys can see this as the most recent break of structure on the bullish side. The market pushed all the way from here, right there. We can call all of this a pullback into this other block that's marked out there. So we can expect this to go up if the market is truly bullish, right? So first things first, we have seen the market has come into the area of demand on the daily time frame. Now, typically, I mark my demand levels from week to week. Okay. My demand levels are typically from week to week, something like this. This will typically be my demand level. So it's safe to say that the market has come into the demand level and we are getting that initial reaction from that particular demand level. Now, the range of this demand level is very wide. So if I'm going to get this sort of reaction from the demand level, I'm not going to trust it the very first time it comes into the demand level, right? That's a very old demand level. Obviously, I'm expecting that initial reaction from the demand level, but because the range of the demand is very, very wide, I want to see the market pierce back into the demand level. Now, this is on the bullish side. If the market is going to buy, like I said, it's very, very possible for us to see the market skyrocket to the upside, create a new high, fulfilling the bullish narrative. All right. At the same time, Obviously, we can see this bearish narrative coming on, but it's mostly coming from like the internal structure of the market right now because the last low, this is the last low that created the last high is not been taken out yet. So anything that's happening right now is mostly coming from internal market structure. Now, what do I mean by internal market structure? When we look at the nature of that leg of price, we can see that we definitely have structure inside of there. We have high, low, high, low. We have all of the market range for a bit, push to the upside, high, low, and then high. Now, internally, we have had a change of character internally. We can see how the market already established a downtrend even before the change of character. We have had the market blow through that. So we can now maybe look at this bearish leg to see if this market is not going to eventually create a new high, if it's possible that something can make the market react and sell, where is that going to come from? We can use the bearish leg to get our structure points where we can expect the market to maybe, right, react from for a sell. So on the bearish side of things, I really hope you guys understand this analysis, right? It's kind of like we're looking at both sides of the market, okay, but only valid levels only, right? Looking at the bearish side of things, of course, I want to establish this more precisely. So we have this as a high, we have this as a low, we have this as a high, we have this as a low. Notice how the market has come back to this order block on the daily time frame, mitigating the order block. That was a signal that I shared last week. Beautiful trade, mad drop there. Now we've had a new low. Okay, the market is seemingly now reacting from this demand level that we are expecting a reaction off of. Okay, and of course, that reaction can push it a lot higher. But if there's anywhere that can cause it to continue selling, let's mark out those levels right now. The first thing, the breaker level. Okay, this is a breaker on the daily. Okay, when we go to the 4 hour, we're going to see that breaker anyways. I'm going to recustomize that. Now, order block coming from the daily, I'm going to mark this out and I'll drag it all the way to that top wick there. So this is an order block from the daily supply level. So it's very much possible that the market can get up to this and go back there. All right. Keeping that in mind for our time frame. You see that? So now you can see the mapping. You can see the mapping. Like I said, this level here is a breaker level. That's looking like straight up liquidity to me, man. That's looking like straight up liquidity to me, man. You're gonna get cooked from that level if you try it. You're gonna get cooked from this level for real though. So, like I said, that's a breaker level coming from the daily. We can see how the daily and the 4 hour are sharing the same structure points here. Remember, all of this we got from the daily time frame. So the daily and the 4 hour, if I can just adjust all of this a little bit, daily and 4 hour, they're both sharing the same structure points. All right. So that's a breaker level. That's a breaker level. And we have an internal order block aligned perfectly with that breaker level. This is an internal order block aligned perfectly with that breaker level. Now, the reason why I feel like that order block is going to get cooked is because that's mad liquidity level, man. Now, sometimes I tell you guys, I don't really know the liquidity the market is going to grab because we still have internal liquidity here. We can see there's a fair value gap here. So the market can grab this liquidity into this order block and just sell. But looking at this based off of experience, we have two breaker levels there now. This one is more so from the external market, and this one here is more so from the internal market. All right. I don't know what to tell you guys, man, but this one can just be liquidity. That's all I can see. That's all I can see, man. That's all I can see. Okay, so I wouldn't really be considering this particular order block. I would be looking more so at this one, or maybe even this one right here. Okay, this could be the extreme level. Okay, remember we want retracements that are deep enough. Okay, we want retracements that are deep enough. We want to see deep retracements, right? Well, if you're able to plot your fib from this high, maybe all the way down to this low here, you can see the fib level is suggesting to us like way deeper levels. So fib can be another of your confluences here. This is another way to use Fibonacci. Okay, that's the last major push that took out this. So instead of dragging your fib all the way from here, you can adjust your fib and start it from here. Okay, but I'll be trusting this level more than I'll be trusting this level here. Okay, now moving ahead to the 2 hour time frame, just narrowing down these levels a lot more. You can see that there's a level right there. Okay, there's a level right there. And in fact, there's even multiple levels now on the 2 hour time frame. I can see more so. Um, Normally, this is how I would mark my order block, but I'm trying to bring out 2 order blocks from here so I can give you guys some options. This is another kind of like order block here. So this is more so a lower time frame breaker because I got that from the internal structure. I know exactly what I'm doing, but like if you've not been following me for a while, you probably don't understand what I'm doing. My students will understand exactly what I'm doing. Okay. So this will be an entry. I'm just trying to coin out 2 order blocks from there. But a lot of the time I'll just go for the first one here. I'll just go for the first one here. But let's see what happens there. Okay. So that's one level we can expect the market to sell from. So the market could come right here and continue the selling to the downside right there. Okay. You might want to look out for that. You might want to look out for that. Or I don't want to make the charts too messy, man. Like when I start to do all of these markup, it makes the charts messy. Usually I want my charts to be clean. I would remove older and past opportunities just to focus on the present opportunities. But yeah, that's another level where you can expect the market to come. Now again, you notice how when I jump from time frame to time frame, certain levels disappear, right? The charts become less chunky when I jump from time frame to time frame. All of this is based off of customizations, right? So on the daily time frame, you can't really see those 4 hour levels. On the 4 hour level, on the 4 hour time frame, you can't really see those 2 hour and those 1 hour levels. So follow me now on the daily time frame, right? Follow me now on the daily time frame. So on the daily time frame, I'm sorry, let me just run back and do this. On the daily time frame, we have this level here. I want this to be visible on the daily time frame. Again, this is how I create the templates. All right. You tweak the visibility. Now, on the daily time frame, we have that as a daily breaker level. So it's possible the market hits the daily breaker level and sells, or the market pushes into the order block. Now, pay attention to where the daily order block is. Pay attention to where the daily breaker level is when I go to the 4 hour time frame. Okay. Now, using 4 hour market structure, okay, 4 hour market structure now is going to be from this high, since this is the range we're looking at. We have a high, we have a low, we have a high. What I'm marking out now is the 4 hour structure. We have a low, we have a high, we got a low, we have a high. This high causes this break of structure on the daily. That's the point where the market broke that structure on the daily. Now, we already have a break and retest of the breaker. So you see why I don't trust the breaker? We already have a break and retest of the breaker. Then we have the market pushing into this level and creating a new low. Okay. Now, we know that the market could sell from the higher time frame breaker, which is this, or it could push higher to the daily order block, which is this. On the 4 hour time frame, however, the 4 hour internal order block that is aligned with the higher time frame breaker, I'm picking this one. Okay, I'm picking this one. This is the one I'm seeing based on my experience that is in alignment with this breaker level. I'm saying this one could be sufficient liquidity for this one. All right. This is for our internal market structure. Okay. Aligned with daily breaker. Or the market could push further into this, maybe just tapping the daily. If the market should tap the daily, you can see how this other block is aligned with the daily too as well. So it's very much possible for us to have deeper retracement into this. And so that's basically the trade idea. Then, when I go to the 2 hour time frame, I'm now starting to get smaller zones. I'm basically just starting to get smaller zones. All right. I know the chart is looking very colorful when I get to the 2 hour time frame, but that's the flow. That's the flow that I'm in. Okay. Usually I don't really have a lot of these marked up. I don't like to have a bunch of all of this marked up. So yeah. So that's Euro USD. That's Euro USD. We have something similar going on GBP USD. We have something similar going on GBP USD. I'm afraid GBP USD might have hit a valid enough level on the 2 hour time frame here for it to sell. But again, we have sufficient liquidity on this. Now, if you go back to the 4 hour time frame on GBP USD, you would notice how GBP USD never really came to this order block. I'm rooting for this order block, man, on GBP USD. GBP USD sometimes can be so crazy that it can just have a massive sweep to the upside for some reason, back into this order block and sell. Again, this is the idea of liquidity still, right? We have a break out of this level here. This is the idea of liquidity, right? So we have this low, high, break of structure internally here. You can see how the market never came back there to mitigate that order block. So that order block is still very much valid, right? This trend going up here, right? There was a change of character somewhere in there for that to happen. So this trend ended up reversing. And then on the leg that came down, we have some unmitigated supply levels there. That's the idea of liquidity. All right. So I'm kind of rooting for this order block on GBP USD. I don't know how it's going to happen, but GBP USD can be a sneaky, you know, young lady sometimes. You can just still, for some reason, find a way back up into this order block before it drops finally, considering the fact that Euro USD, which is its very close counterpart, we've seen Euro USD having, deeper pullbacks. Look at this leg on Euro. Look, okay, let's examine when the sale started on Euro USD. Let's see the sizes of the pullbacks that we've been having. Look at the size of this pullback. We came back into this 4 hour order block. Look at the size of this pullback. We're coming back into this zone. Look at the sizes of these pullbacks here. Look at these pullbacks here. These are sufficient pullbacks. Even now, we're kind of like pulling back into this area for a sell. I mean, you would say these are reasonably sized pullbacks as compared to, GBP USD when we had all of these impulse to the downside. This is the type of pullback that we had, right? We had all of this impulse to the downside. I mean, myself inclusive, I was looking at this as a liquidity level. I was thinking this was definitely going to grab this, but then he ended up failing. This is the idea that anything is possible in the market. I don't know which liquidity is going to be grabbed at the end of the day, but there was a possibility of a sell from this level here, and the market decided that, you know what, since there's sufficient enough liquidity in this level here, then of course I can just sell from here, right? We don't pick and choose the liquidity for the market to come and grab. The market would decide to grab whatever liquidity it wants to grab and just allow the market to do its thing, man, because you never can tell which liquidity the market is going to grab. Okay. But on GBP USD, I feel like there's sufficient enough liquidity now for the market to come back here. So we're just going to have to see how that develops. Now, on the selling side of things, on most recent market structure here, I'm not really seeing a bunch of unmitigated supply levels. Well, I would say this supply here is unmitigated on the 4-hour time frame. Man, that level of supply is quite tricky though. I'm not even gonna lie to you guys, man. Like, I don't like to see supply levels like this, honestly. But again, the strategy is the strategy. It is what it is. You just have to take it as it is. Okay. Sometimes you don't expect the market to be looking sexy just because you want it to look sexy. These are the laws of market structure we just have to follow. That's sufficient enough liquidity for the market to grab into this order block for it to keep selling. Let's see what this is looking like. Maybe on the 2-hour time frame on refinement. So you see the 2-hour order block here, right, is basically the same size with the 4-hour order block. It's basically the same size with the 4-hour order block. The 2-hour order block is basically the same size with the 4-hour order block. Now, when we look at the 2-hour time frame, we can see successful mitigations of 2-hour order blocks. We can see nice order flow coming from here. Mitigation, that was a trade I caught last week. Mitigation, okay. Back into like a fair value gap. Now, this failing to get back to this area here breaks down, gives a new break of structure, new low. Of course, liquidity is now created here. That's why I said it's very possible for us to come higher, grab that liquidity, and then sell. All right. So that's one thing you're probably going to look out for on GBP USD. Um, on the sell side. On the sell side. On the buy side on GBP USD, I'm going to take a look at it right now. I'm going to take a look at the buy side because, like I said, we're basically analyzing both sides of the market, both sides of the market. The sell side, the buy side. Anything is possible. The market could buy, the market could sell. So we're analyzing both sides of the market, but we know we have precise levels where we're going to look to execute from. We're not just executing from anywhere. All right. So going back to the daily time frame, GBP USD, there's not really enough for me to walk off of here. Okay, it's possible there's an internal break of structure here. Okay, because this never gave me a break of structure externally following the bullish trend. So this never really gave me a break of structure for me to say this is like a true and valid order block, right? However, at the same time, there's a break of structure here internally. So it's possible that, we can expect a reaction from that order block based off of the fact that it's indeed an internal order block. So like I said, I draw my order block from weeks to week. That's just how I draw my order blocks. Okay. If you reach your turn, draw your order block from open to week or just the body alone. Like it depends on you anyways. Like anyhow you want to draw your order block, draw your order block, man. Like so I can say we've had like first reaction from that level. And of course, again, going back to the consistent theme of the way I operate, like I said, I can expect the market to get into that demand level a lot more. That first reaction there, I mean, I can expect a first reaction because this order block is kind of like an old order block. It's been a number of days, maybe weeks, maybe even months. This is August all the way to October. So yes, we can classify this as an old order block, right? So we can definitely expect that initial reaction. But of course, we can still expect the market to push in deeper. Okay, so even here coming to the daily time frame, we can now mark this out as a daily order block. Again, from week to week right there, that's a daily supply. So we can expect the market to either continue to the upside or as it's going to the upside, meet resistance that makes it sell. I'm probably leaning towards the selling side a little bit more, just based off of like the US government and everything that's going on. I don't know. I don't really know how those fundamentals affect the market, but technically, I'm seeing that these demand levels, there's a possibility that these demand levels might not hold. Looking at the massive pool of liquidity underneath here, I know for retail traders, first touch, second touch, third touch, you guys are willing to buy. But again, the reverse is the case for all smart money traders. We see this as an equal low, and it's kind of like a price magnet. There's like a huge pool of liquidity underneath that area there. So basically, right now, price is trapped between um this demand level here and this first supply level here. So let's see what happens in price. Well, but let's see what's good. Let's see what the market is gonna do. Okay, so it's just gonna be Monday tomorrow. Let's see how the week develops. Let's see how the week develops. Let me look at this again on the 4 hour time frame here. Okay, 4 hour time frame. It's cool. We can definitely expect the market to pull back into this a little bit more and have that sell off from there. That wouldn't be a bad trade, honestly. Like I really want to see the market pull back up into this so that we can have that sell off from there. This right here would be the last level of demand. So for the fact that the market is kind of breaching through that level there, that's telling me that the market intends to go lower. We can see how the market is breaching through that last line of defensive demand levels there. How do I know that's the last line? Of course, you can see successful completion of order flow around this area here. So if this was a valid level to be holding price, and of course, we can see the market slightly breaching through that level there. I don't think the market has any reason to come below this particular level of demand. That could be an inducement level. Oh, this on the 4 hour time frame. So again, the 4 hour is a higher time frame. So if the market is breaching this level on the 4 hour time frame, then I'm reading that as the market intends to go lower. Keeping in mind that we have this massive pool of liquidity just under here. Trust me, man, if the market is going to sell, it's going to do that very, very quickly. Okay, it's going to be like one of those trades where the market just drops like a rock in the ocean. All right. So you can see the market breaching through that demand level there. That's intention that it might want to go lower. But again, all we can do is mark our levels and wait to see how the market reacts from those levels. All right. Um, GBP JPY. I don't really want to touch these guys right now because there's a lot of market gap here. Usually the market can come back to fill up some of these gaps. I mean, but typically I wouldn't want to touch GJ and UJ right now based off of the fact that their price action is just not giving a lot right now. So gold on the daily time frame, very quickly, we are still bullish on the daily time frame. Word on the street is that gold can get to 4,200, maybe even 4,500 per ounce. That's word on the streets. But just going off of the price action here on gold, we see the market is failing to reach this level here. So it's kind of creating liquidity on the daily time frame. However, something entirely different is happening on the 4 hour time frame, whereby the market is reacting from demand levels on the 4 hour time frame based off of like 4 hour market structure. But again, this market needs to break higher to the upside for us to confirm bullishness. So we're just going to see how this market develops. Now, based off of the fact that we've had a break of structure to the downside, I want to say this could be a resistance level, although you need to be careful of the fact that, this is still, the market has been creating higher highs. The market hasn't given us multiple breaks of structure to the downside to say, I am now bearish. All right. So I might want to see a reaction off of this and a confirmation on a lower time frame to maybe sell this market. But again, gold is actually bullish. Fundamentally is bullish. Technically is bullish. We're just gonna have to wait to see how gold price develops during the week is going to really guide us. But again, that would be a resistance level. I might be, I mean, that's a double top. A double top is an indication that there might be selling activity coming into the market. Okay, I'm not going to just throw away these retail ideas just because I don't trade with that school of thoughts, right? But that's a double top. That could be an indication that the uptrend is finally coming to an end. We can start to range at the top there, maybe fake out to the downside a little bit, which will mean that the market will sell. I don't really know. But this is a market that you might want to just watch and see how it develops. Or you can go on lower time frames to see if you can scalp anything, but I wouldn't advise that because the price action on the lower time frame is kind of sketchy. I won't even lie. You know, this is kind of sketchy. All right. So my advice would be to wait until the market opens to see how the market is going to develop before you jump into the market there. All right. So this is US 30. Quickly on the daily time frame, again, you can see how this got to all-time highs, and then you can see how it's tanking from those all-time highs. Now, when the market goes into all-time highs, of course, that's no man's land. It could just tank from there because obviously it has created a new higher high. It has to, or it needs to reverse, or it could just keep going higher. Okay, something like this I'm thinking might happen on gold. I don't really know. But again, we have levels whereby we marked out earlier or previously. The market failed to reach those levels, especially when we start to zoom in. On the daily time frame, you can see how the market missed some daily levels and you can see the momentum coming back down. It's safe to say that the market is targeting some liquidity levels. Okay, so this level here, the market failed to reach. This level here, the market failed to reach. This level, some more levels below, the market failed to reach. I don't know which of these demand levels on the daily time frame the market can react from. All we can do is wait for the market to actually get to those levels. The first one is going to be this level right here. Okay, because we can see that this one on the daily time frame, it looks as though it's been mitigated, right? Everything within this, push to the upside has been mitigated. Okay, let me just mark out. So this first order block here mitigated. This area here unmitigated after this break of structure. This area here, we can see how the market came back, mitigated this. So we have successful mitigation here. Successful mitigation here, boom. Successful mitigation here, boom. Successful mitigation here, boom. Successful mitigation here. Okay, right there. And this area here, if you were expecting this for this, you can see how the market has now changed character. All right, so this is the last low that created the last high. We can see how the market has changed character from there, right? On the daily time frame. So once the daily has changed character, of course, we can expect that the market can start to follow that trend on the 4-hour time frame. So very good that that's not showing on the 4-hour time frame. But again, looking at the 4-hour structure now, we can see 4-hour breaker levels. This level here, that's if the market is going to pull. This is a massive pull. You know what? Just wait for the buys, man. I don't want to even start to show you guys counter trend opportunities or counter trend ideas. Is safest to trade pro trend. Okay, it's safest to trade pro trend. So looking at this here, based off of the fact that this order block here has been mitigated, I can expect that this order block is going to be invalidated because there's liquidity now below this. I can expect that the market can come here, maybe range for a bit, and now maybe give me something like that. All right. Okay, so you want to be patient with this market. Allow this market to develop because the price action is not looking very sexy right now. Okay, so you want to be a little bit patient with these markets. All right. So we're back at BTC. That was a great time running through all of these markets with you guys. I really hope you guys gain value from this. This is basically a pre-market open breakdown, walkthrough, whatever you want to call it. I would really want you guys to watch these videos and get value from these videos. So yeah, up until next time, I'll see you guys in another one, man. It's gang gang.